This is Top Accolade Global News Updates. I am Sohibifa Jackridge. The Israeli military took control of the vital Rafah border crossing between Gaza and Egypt on Tuesday, pushing into the southern Gazan town after a night of airstrikes and as prospects for a ceasefire deal hung in the balance. The Palestinian militant group Hamas said late on Monday it had agreed to a ceasefire proposal from mediators 7 months into the war that has pushed more than 1 million Gazans into the south of the enclave. Israel said the terms did not meet its demands and launched a military operation in Rafah. Israeli tanks and planes pounded several areas and houses in Rafah overnight, killing 20 Palestinians and wounding several others in strikes that hit at least 4 houses, Palestinian health officials said. Israel has been threatening to launch a major incursion in Rafah, which it says harbors thousands of Hamas fighters and potentially dozens of hostages. Victory is impossible without taking Rafah, it says. A Gaza border authority spokesperson said the Rafah crossing, a major route for aid into the devastated enclave, was closed because of the presence of Israeli tanks. Israel's army radio had earlier announced its forces were there. The United States has been pressing Israel not to launch a military campaign in Rafah until it had drawn up a humanitarian plan for the Palestinians sheltering there, which Washington says it has yet to see. Israel said the vast majority of people had been evacuated from the area of military operations, instructed by Arabic text messages, phone calls, and flyers to move to what the Israel military called an expanded humanitarian zone around 20 kilometers, that is 12 miles away. Some Palestinian families began trotting away in chilly spring rain. Japan may have to take action against any disorderly, speculative-driven foreign exchange moves, the government's top currency diplomat Masato Kanda said on Tuesday, reinforcing Tokyo's readiness to intervene again to support a fragile yen. However, when there are excessive fluctuations or disorderly movements due to speculation, the market is not functioning and the government may have to have appropriate action. Continue to take the same firm approach as we have in the past. Tokyo is expected to have intervened on at least 2 separate days last week to support the yen after it tumbled to lows last seen more than 3 decades ago. Bank of Japan data suggested authorities spent more than 9 trillion yen, that is $58.4 billion, in defense of the currency, helping lift the yen from a 34-year low of 460.24 per dollar to a roughly 1-month high of 151.86 over the span of a week. Tokyo is estimated to have spent around $60 billion during its last forays in the markets to prop up the yen in September and October 2022. The yen, which is down nearly 9% on the dollar this year, was last trading around 154.26 in the late Asian afternoon. Japan is reluctant to intervene in the currency market considering its limited available dollar cash reserves and U.S. Treasury Secretary Janet Yellen's comments that such moves were acceptable only in rare circumstances, said Hideo Komano, chief economist at Daiichi Life Research Institute. Microsoft was hit with a Spanish startup group's complaint about its cloud practices to the Spanish antitrust regulator on Tuesday, the latest grievance over its fast-growing cloud computing services, and which followed a trade group's EU complaints. The US tech giant ranks second in the cloud computing sector behind market leader Amazon, but is expected to close the gap rapidly as a clutch of generative AI features powered by OpenAI's technology attracts business users. The Spanish Startup Association, which represents more than 700 startups in Spain, cited a number of allegedly anti-competitive practices by Microsoft in recent years. These practices include barriers to data probability or contractual conditions that restrict competition in software licenses, preventing the free choice of providers of these services, reducing the capacity for choice and flexibility that startups need to be able to be resilient, innovative, and grow, the document said. The association called on the Spanish Competition watchdog to launch an investigation and to take urgent measures to ensure a competitive market. We believe that all companies should be able to compete in an environment of equality so as not to be left behind, either as customers or as companies providing this technology, Carlos Mateo, president of the Spanish Startup Association, said in a statement. Cloud infrastructure services providers in Europe, CISPE, whose members include Amazon, last November complained to EU antitrust regulators about Microsoft's new contract terms imposed on October 1st, along with other practices, saying these were harming the European cloud computing ecosystem. The European Commission has asked cloud rivals about Microsoft's request for customers' data as part of its investigation, while the UK Competition and Market Authority is also probing the sector. Saudi Arabian state-owned oil giant Aramco expects to pay $31 billion in dividends to the Saudi government and its shareholders, despite reporting lower earnings for the first quarter on Tuesday, hit by lower oil prices and volumes sold. The Saudi government, which directly holds about 82.2% of Aramco, relies heavily on the company's payouts, which also include royalties and taxes. The kingdom, the world's biggest oil exporter, is spending billions of dollars to diversify its economy away from crude. Aramco reported a 14% decline in first quarter net income to $27.3 billion in the 3 months to March 31st, in line with analyst estimates and down from $31.9 billion a year earlier. According to a company earnings statement, the company declared base dividend payouts for the first quarter totaling $20.3 billion and a performance-linked dividend distribution of $10.8 billion to be paid in the second quarter. It said it expects total dividends of $124.3 billion to be declared in 2024, of those $43.1 billion in performance-linked dividends. OPEC Plus has implemented a series of output costs since late 2022 amid rising output from the United States and other non-member producers and worries over demand as major economies grapple with high interest rates. Brent crude has averaged around $83.50 so far in 2024, while Saudi Arabia needs oil at $96.2 to balance its 2024 budget. The IMF forecasts, with a projected budget deficit of 79 billion riyals, that is $21.7 billion this year, the kingdom could delay parts of its multiple mega projects. Finance Minister Mohammed Al-Jadan said recently that the kingdom's Vision 2030 plan to transform its economy will be adjusted as needed, with some projects being scaled back or extended and others accelerated amid a challenging environment. The kingdom could also raise up to 138 billion riyals, that is $36.80 billion in financing in 2024 from $23 billion initially estimated at the beginning of year. The Saudi government in late January ordered Aramco to scrap its expansion plan to boost production capacity to 13 million barrels a day, returning to the previous 12 mbpd targets. An investigation firm backed by LVMH is betting demand from wealthy Americans for quiet luxury will ensure its €510 million, that is $545 million, stake in Italian shoemakers Tod's yields the double-digit returns private equity typically seeks. L Catterton, created by US fund Catterton and LVMH owner Grupe Arnault on Friday, secured sufficient shares to take Tod's private once the deal, valuing the company at just over €1.4 billion, that is $1.5 billion, formally concludes in the coming days. Listed in Milan but controlled by its founding Della Valle family, Tod's profitability has lagged rivals. Last year, it postponed marketing investments to help increase its operating profit margin to 8.4% of sales, behind Prada's 22.5% and Brunello Cucinelli's 16.4%, partly because more of its production is in-house compared with peers. Producing internally costs more than outsourcing, but gives brands greater control over quality. El Carterton has offered €43 a share, deemed good value for the investment fund considering Tard's listed at €40 24 years ago, when it became the first Italian luxury brand to go public. Under the stewardship of private equity, Tard's will invest in marketing to capitalize on its sober elegance catchit and grow US sales. A person close to the matter said Tard's branded shoes and handbags, including its $695 Gomino loafers with their characteristic rubber pellet soles, have a healthy following among well-off consumers aged 40 and above. Further up the luxury ladder, Roger Viva, the Paris-based $950 a pair barcode shoe brand it acquired in 2015, appealed to Asia's biggest spenders. But the group's smaller brands such as Faye, which makes jackets inspired by US workwear, and Hagan, which pioneered the luxury sneakers trend but failed to profit from its boom over the last decade, need refreshing. A failed attempt in 2022 to take Tard's private aimed to manage diverse brands separately and possibly divest the least profitable ones. That is the size of Top Accolade Global News Update. You can follow us on our social media platforms as displayed on your screen. Happy Tuesday.